Instant approval, same day business funding up to $10,000, even with a poor credit score, no credit requirements, in fact, and with a personal checking account. You can also have a business checking account as well. Hi, welcome in. This is Michael with Viral Funding Solutions. I'm a business funding expert. You could also say a business loan broker expert who's helped out a lot of people get the right type of funding under the right strategic partnership and roadmap for longer term. I'm an introvert. I'm very cerebral. Where I get my keep, or you could say earn my keep, is going through all of the documentation. Think of me like an underwriter. I pre-underwrite a lot of files. I know what the best underwriters and lenders are looking for. Hey, I might just become an underwriter and then become a lender because I'm very analytical, math oriented, system oriented. So I review a lot of documentation throughout my day. I did quite a bit of that earlier today. And I get a lot of fulfillment from that, helping you as a person, as a human first, and then evolving into the business aspect. And so looking at a lot of this documentation, bank statements, tax returns, P&Ls, balance sheets, I've accumulated a lot of experience in my time being able to understand how to underwrite these, how to look at them, and what everybody else will look at and say in response to. And I know about cash flow, profitability, revenue, how to increase it. When it's decreasing, what should you do? Should you set up different contracts, restructure so that you can get more profits, keep more profits, and do more longer term, and so much more. So I just wanted to clear the air, especially if you are the first time or in case you forgot this, that's what I do plenty of day in and day out. And I do truly care about you and your success. And in just a second, I'll be going into the qualifications on what it takes for this new service that has rolled out and what you should know about. And I'll leave more information to this down below in the description to get started and all extra resources. In fact, there will be a free questionnaire form down below you can fill out, where then I will be able to pre-underwrite, even without documents, showing you information that is not even publicly released, giving you a highly personalized and customized email/PDF response with your best funding option and options thoroughly broken down, even ballpark numbers and things like that. Just remember, that's where I do a lot of my heavy work. And why people turn to me, in case you were wondering if this is your first time or you just needed a reminder. Well, with Viral Funding Solutions, we ceased to exist because I got very tired of seeing a lot of these online marketplaces out there, over-promising, under-delivering, sending your information to other places, whether it worked or it didn't. You're getting bombarded, whether you knew that or not to be the case. And it just ends up getting just in a position where you just don't want to even think. You don't even want to wrap your time and energy around, let alone a thought about that. And then all these other scams, all these other unethical providers and lenders, and whether they are legitimate or not, they end up wasting your time and energy. They don't get you maximum funding at the best rate and terms, the best strategic partnership and roadmap for longer term. And I've figured that out. I've vetted the best lenders out there that I have these relationships with, and I know what's best in this market. And there are only 3 ways you can get funding. Keep this at the top of your mind before we get into this document in less than a minute. Cash flow, revenue, income based. You have credit backed, collateral. If none of those 3, we work on business trade credit as a startup. And as a non-startup, you should be working on that installment, revolving credit, helping you build your business credit profile. There's nothing greater than that, separating your personal from your business so you can get higher tier services later on where you can get those SBA loans, online bank term loans, have the right FICO SBSS business liquid credits, Experian, Equifax, DMB scores, and much more that'll help you raise your capacity level. And why people turn to me as well very quickly. I'm very loyal. I'm more of a listener. I don't talk much. You see me here on video, but I'm really not somebody who talks much. I have a lot of knowledge to share with people, and not just funding related, but being very loyal. I'm a Libra. I'm the oldest of 2. There's 4 of us in our family, my mom, my dad, my younger brother, myself. A lot of people would say I'm kind of like the quote unquote silent partner or quote unquote brains of the operations. And I do a lot of the front end work as much as I need to as well. I do it very ethically. humble, respectful, experienced, flexibility you get with me. You'll get the benefit of the doubt. Don't mistake my kindness for weakness. I know my stuff very, very well. I don't pressure people at all. I don't use sleazy sales tactics. I don't even like to use the word sales. In whatever good or bad context. I come from an educational background. I went to school. I studied. I was a Division I soccer player for a little bit. I then studied a little bit of sociology. I then transferred over to chemical engineering. I took those classes. Chemistry is my favorite class. I like calculus. I like a lot of that. And then I made a big change. It was a big time. And since I had satisfied certain requirements and I had done a bit of these classes already, I thought I want to start a business. So I got into the whole business side, and then the rest was history. I've worked in construction, manufacturing back in my younger 20s. And I actually worked in the field, operating the machines, working in the field and other services out there. I was, a ramp agent at some point, warehousing. I did a few other roles where I had to be out there. And then later on got into a financial logistics position where I was being underpaid, undervalued, I would say underappreciated, and working for a huge contracting company servicing HP&P South and a few in the vicinity. And that company ended up getting in a transition, got bought over. That company then went down under, as we all thought. 50 plus people then got relieved. A lot of people have higher up positions, budget costs, new transitions, right? And so not every job or career is in stone. And so you're going to change more than ever now in this market. And so at that time, I was preparing to start a business. Thankfully, I knew that there would be this transition. I had to go back on unemployment benefits, food stamp cards. It was not a good feeling. It was, I'm not thinking about it now, but try not to let my thoughts go there. It just was not a good time. And I couldn't even go up to the register and pay for my groceries. I couldn't look at the person in the eyes and just say, thank you. And introverted me would just walk on by, put the stuff in the bag and walk on out, relieved, feeling the tension building up. And just to go out for a meal and feel like I couldn't provide that. And even splitting it 50-50 when I knew I could, that's who I am. I was like very hesitant to do that. And then having to fill out things. Could I have done something else? Of course. But also at that time, I was given a little bit of the freedom then to then explore other avenues. So that's when I started really getting drilled down on starting a business. I got into the whole digital marketing agency, lead generation space, health affiliate marketing. I still have those other verticals in the affiliate space. I did a hybrid with e-commerce for a little bit. Then I went back to the whole blog thing. And then I have other ventures. This is my main focus right now, is it as a business funding expert. So that's kind of a long story short without getting into all the little details, but I have a lot of people to be thankful for, and I'm very grateful for. And again, I try to get the words through, and it's just through being in business for some time that I guess not naturally, but it works better now. So let me get into this document. At any moment, if you guys have any questions, please feel free to leave it down below in the description, or in the comments. There will be more information in the description. So again, just as a reminder, I won't go through this, but you can see what it says there on the screen. This is same day instant approval funding for those of you that have lower revenue. And I'll get into the requirements right now. Let's go through it. So here, this may look a little bit familiar depending on where you've seen a little bit of this. If I've shared it with you, especially in the questionnaire, if it's more customized to you, you'll then see those numbers look a little bit different and adjusted. And there's also a few bits more of details that I can put in those. So here it says self-employed 1099 gig worker contractor funding. So let's pause there. This is a combination for those of you who are self-employed, gig workers, 1099s, independent contractors, etc. Any small business really can qualify for this. I know there are higher risks, and it'll also be dependent on the depositing and depending on how much revenue you do generate, because these are going to be a lot of higher risk files. And if you stick with me till the end, I'll get into some of the alternatives. So please stick with me for that. It shouldn't take any longer than another maybe 10 or so minutes, and then we can close up here. So self-employed 1099 gig worker contractor funding, etc. Best option you can use, a personal account for business. If you're using a personal account for business, then this is your only option or your best option besides the one right up above, which we'll remove that. I moved that from somewhere else, so we can ignore that a little bit. So with that, and I was referring to another service. That's for another time. But this one here is really like the only one, or one or two, or like really the only one that's doing this. And again, like I said, I have the best lenders and providers out there for defaults. And if a default were to work, what would it look like? If it weren't to work, what then would it look like? For lower tier revenue, for A, B, C, D, plus type of tier clients. And you probably have heard me say that if you've watched me a few times, but I go over different revenue and underwriting categories, and every lender and provider is different. So based upon your file, based upon your documents, what you have, that's how I tailor it best to understand where to then take you. And I understand what the underwriting would then look like over there. So a new quote unquote product for the self-employed 1099 gig workers, independent contractors, Uber, Lyft, grocery shopping, etc. Just imagine the capabilities of those of you who are gig workers just alone and out there trying to figure it out on your own. Get enough funds to keep yourself going. A tire blows out, it's your own car, you need to replace that. You need to get a repair. Something happens where it breaks down. You're delayed a little bit. You need additional funds to complete your project or projects. You need to separate and make more room for money coming into the business and other things, and hold on to more at the same time. Small businesses and more, you will be able to get up to $10,000 without needing to have a business checking account used for business. That's right. You can use a personal account for business or business too if you have one with lower revenue, around 3K plus per month. Is that what we're going to get into now? Here are more of the details. Same day funding up to $10,000. This is a huge leverage point for a lot of you who are, I don't want to use the words underperforming, but you have lower tier revenue. And just keep this in mind. With lower tier revenue, a lot of you out there go, well, I'm doing 5, 10,000, even 15,000. That's low revenue. That's like a higher risk. In your industry, if it's a high risk already, boom, it either won't work or you're just going to get a lot less. What's your experience in getting funding? Okay, none. Got to start you with less. Industry, less. Okay. Well, you have to begin somewhere. You can't say, well, because I'm doing 10,000, I need to have 20 to 100,000 plus. That's not how this works. At a time, there may have been where you would have seen 75 to about 125% for a lot of these. Now, a lot of this, you're seeing 25 to about 75%. It's the ecosystem. It's the market right now. There's a lot of changes going on, and I speak about this frequently. I'm not going to get into that in this video, but we can come back around it, and I've already created content for this. The approval amounts, they are equal to 25% to 75% of your monthly revenue. Those are the approvals. Again, the approval amount, 25 to 75% of your monthly revenue. And we usually look at the lowest month in the last 90 days. We can take the average into account, but when it's so far apart, we usually take the lowest amount. So let's say a client who, in another example, was doing 50,000, but they're averaging around 89,000. Like, we can't come between the two and say that'll be the number that we base it on. We're more than likely going to take the lowest amount in the last 90 days because that gives us also cushion. And in case anything were to change, we want to see your true revenue. And true profits is a bit different. That's not where we're getting at this. But we want to make sure there's enough cash flow to also service the debt and do it for what else you need to use it for. So here, as an example or rule of thumb, that's what it is. Example, you do $14,000 in monthly revenue. Then what we would advance you is $10,000 advanced. Now, keep in mind, these are called advances. These are based on your future receivables, your future revenue. This is not technically a business loan or a loan. Let's get those two right. If you've never received this type of funding in the past, or perhaps you do, you know where I'm going with this. It's not based off of a traditional ARM or an amortized loan remittance over 12 plus months. And even if it got to 12 plus months, you try to convert things into an APR, which you may or less can see that, and try to translate things into an interest rate per month and break it down even less than that, what it would look like per week, bi-week, daily, etc. But these are not traditionally amortized that way. We're taking a future percentage of your future sales. So whatever you're making there, a percentage comes back, and that can fluctuate depending on if you make more one day, more gets taken out, less gets taken out, none, really none of it does. And then there are fixed. So there are those that are daily and those that are weekly. I'll get into that in a second. There are no monthly funders out there. If you're looking for a monthly option with lower revenue, that's not going to work. And even if you have high enough revenue, but you don't have the credit, you don't have the business credit, you don't have these other components that we look for, and I can share those with you. If you're a higher tier revenue client, would credit work best? Would collateral? Would cash flow? It just depends on your needs, your use of funds. How fast do you want it? How much documentation can you, will you supply? And if you can do that, it's another question. and what is your actual best scenario right now. If that's not what you wanted, how do we restructure it where it does make at least some sense that you can take a little and then migrate or then get more over time. So that's how it goes. A lot of these are going to be weekly. I'll just let you know. I'll get into that in a second. So that's a huge advantage. You have lower revenue. There are still those lenders who could do daily and weekly. And if this weren't to work for some reason, or if you're a repeat client and we speculate there's a better option, then at that point, then we can look at that. But there are still those lenders that will do daily and weekly. With this one, we have weekly, which is a huge, huge plus. Other ones with the approval amounts for other providers that I work with, and I still frequently go to, it's an approval normally of what I'm seeing there is like 40 to 60% of their monthly revenue, sometimes 75%. But a lot of the times with lower than 10, lower than 15,000, don't expect to get 75 to about 100% or 75 to 200% because your revenue is just too low. So let's get back into this. And you have to understand how you're using these funds. Are you using them to pay off expenses for utilities, bills, mortgages? What do you, credit cards? Do you have a growth opportunity? That's what a lot of this money should be used for. You should be taking this money to grow your existing revenue generating income stream, whether you have one or multiple, or you're creating a new one. Understanding how to get more profits, earn more profits. If your customers are paying you on a certain remittance and schedule, instead of giving them free range of 60 to 90 days and then pay you back, give them an incentive to then pay you back early within 30 days, if not in the next 10 to 15 days, more or less. And that helps you with more profits and restructuring other things that you have in your business. There are other ways, having the right employee, having the right amount of employees that are fulfilling and helping you generate that revenue. There are many other ways to restructure and understanding your EBITDA, profit, and cash flow. I'm not going to get into all that right now. That's for another time, and I've helped out a lot of people with that. Every industry is different. Of course, it can be lower depending on the situation. I would like to say higher, but that's normally what it will turn out to be. When you start getting more funding, let's say this is your first time or second time, okay, that lender then helps you. Hey, they may be able to push now past 10,000. Hey, we see this. Okay, good. Now we'll probably give you 15,000 plus. We can work with you with the same lender. And if you needed another one and you needed to add another product because your revenue is then growing and at a rate where you can't pay the first one off completely just yet, well, okay, now we try to get a second position if possible. So I can work with you on a lot of that. 1, 2, 3, 4 plus positions, 5 plus, etc. Average pricing, it is 1.39 your dollar amount. It can be low as 1.29. Let me put that. And as high as 1.69. But we see a 1.5 at most when the revenue is better. Example here, and that'll illustrate the 1.69. That's a factor rate. It's a total payback. When we say there's no interest rates, we do this calculated on total payback. Very simple to understand. There's things on our end like buyer and seller rates and other things we understand. That's on the broker side, broker/agent side, that it's not going to make too much of a difference on your end. It's just, here's what the buy rate is, here's what the rate is, the total payback. You're going to get, let's say, for example, $1,000. You pay back a 1.39 on average. Example, you receive 10,000 and you pay back 13,900 on a 1.39 rate. Very simple to understand, right? Not difficult math. There's nothing rocket science about understanding how the numbers work. Yeah, there's a little bit more in detail that I do on my back end to calculate, especially when we're doing underwriting, pre-underwriting, and other facts of it, where we have to say, okay, now this is the amount, this would be the final offer, this is what it would be calculated as. Here could be the potential early payment discounts. Here's what then this part would look like. So yeah, I like that part. I like the numbers. I like the systems part. And again, I'm an entrepreneur, if I didn't say this, /business owner who thrives in a lot of that, understanding the operations of the business. I do have that creative mindset too. So I've created a lot of things. I haven't been able to think so much on the creative side recently because I've been so focused on the operations of systems and moving things along. But when I do free up my time and I'm not working, a lot of that just comes into my head and I go, oh, that's what I could iterate. That's what I could add, data, engineer that. That's where I go, okay, now I know how to change that. I can go do that, boom, or I can outsource this. But I do a lot of this stuff because I have those skill sets and I've accumulated it for many years. Hi, Julio. How are you doing? That would be a hard call. That would be usually a no for that. Although you could say Puerto Rico and parts of the U.S. Like you could make that case, but that would be pretty difficult to do. We have another provider that is willing to do that, but there are others that are willing to be open to it. It's just hard to do when you're in Puerto Rico, different locations of Puerto Rico, especially, and the banking setup, the depositing, and the transfers I've seen, and there's quite a bit of things to look through, but that's something that I would have to look on a case-by-case basis. There's also other funders out there who can do Canada-backed, so that's pretty good too. I won't cover that in this one. That's a separate thing for another time, especially if you're from there and you run an operation there, or vice versa, etc. So here we sent the average pricing, the $13,900 on a 1.39 rate. Very simple to understand. Now, repayment discounts. They are available if you pay back early. You get automatic weekly repayments only, as I said, weekly, not daily. Maybe it shifts later, but hey, we have weekly, and this is how it's been for a while. For those of you out there who are like, well, I didn't want daily because of how I'm depositing, you have to think too that if you're not depositing little bits every single day, it's every other day, end of the week, once in the week, bi-week, at the end of the month, or twice in the month. That's not a good feeling for us, because we know that you have an ending daily bank balance of this amount. We can calculate it, or we can see that on the bank statements. There are ways we can do this. Starting and ending bank balance is too low. Month to month, it's getting lower. What are those deposits? Where are they coming from? More deposits from different ways, different revenue. Great. We like to see that. Higher amounts of deposits or lower amounts, but a lot of them over the month that accumulate to a lot. And there's more in the activity that we look at in those bank statements and overall. Sorry. No monthly options with any funders. These are 3 to 6 month terms. Hey, huge advantage. So previous or prior to this, we would see normally an average of 8 to 10 weeks would be the initial amount somebody would have to repay that back in. So just around under 3 months. So this is higher leverage for you guys going into 3 months as opposed to 2, as opposed to 2.5. Now it's at 3. Sometimes it could be less depending on the situation. And sometimes the approvals may be even 20 to 25% with even lower revenue. So you got to keep that in mind, because you have a basis of at least $3,000 in monthly revenue up to about $15,000. So this is the range between 3 to 15, if not 3 to 14,000. Once you get to that 15,000 plus range, then we can look at a different provider at that point. So this is all about increasing your revenue and getting into a better position, taking the money to grow and make more money with. It might not be enough, but you got to take it. You got to revamp the things that are going on in your business. Sometimes we don't look at our management of it. We don't actually know as a owner of a business how to increase the cash flow, how to increase the revenue. I can help you with that. So those are other things you got to understand. And maybe there's something we need to tweak to make more money with, and you're not doing enough of. You're cutting into your costs too much. We got to alleviate some of those costs. Cost of goods sold. We got to look at the suppliers and vendors. We got to look at a lot of things to make sure everything looks good. So 3 to 6 months. Renewals are usually 16 weeks, which is 4 months, more or less. That depends. It varies, again, depending on the term. So 3 to 6 months, that can be even higher when the renewals can happen. More so for clients at the 3K plus minimum revenue level. That's what I stated there for that. Personal checking accounts or account, you can see there, can be used for business. You can also have a business checking account. Online banking is set up. We would need to have that. Please make sure we're in a new age, online banking, and I'm going to get into why that's also very important, not only with this, but with others. No FICO credit score check. Primarily speaking, usually they don't have a FICO score check. That's going to work to your advantage for those of you who go, well, I have credit ineligibility issues. I can't get it with the higher tier funder who's expecting this in terms of credit. Now I'm ineligible because I've missed 3, 4, 5 payments, more or less, and it's still okay, but this is less of a requirement, if any, on the FICO credit score assessment, no credit score requirements, etc. usually. Now, California and New York, excuse me, not Newark, Newark, yeah. Okay. New York usually get denied per laws and can't fund there with this service right now. So it won't work for these states. And if it weren't to, and you're in one of those two locations or both, then we'll move you up to another provider that I have that is best suited for your needs. And we'll still base it off and we'll look at things and we could still look at credit and view a few points there. And you're going to have to manually submit the documents that we'll request, and we'll see how it goes here. It's a little bit different, but there's a little bit of a different process when we go through that. Bank linking with Plaid. It's a very reputable company. A lot of other companies use, probably connected with like a QuickBooks and others, but this is a way to make sure that we can verify the eligibility and make sure that what you have in that account is right. It's reasonable. It's very safe and secure. You can search this up. I've made a video review on YouTube on Plaid, as well as a few others out there, like with a bank decision logic verification, and that's different from this. But this is going to work with Plaid. So make sure you have your information ready to go to link it. You must have the credentials for your bank, just so you know that. No, about 5% of banks in America don't link with Plaid. So you'll likely be declined because of that. And you can verify this, run this through your bank, seeing if they're willing to work with, if it's on their list and they're willing to unlock this. And it's just a matter of that. But we need you to link your credentials to be able to do this. This is an automated process. Just imagine how much manpower would it take to underwrite these files? You would have to have separate underwriters, and you cannot have these junior, senior underwriters. Heck, myself going through a lot of that, sending bank statements with lower revenue. You cannot just handle that. And it's usually at the end of final underwriting, if not in the beginning, where people get declined. Background, certain credit thing, month-to-date revenue, not enough. Other things that stand out, okay, that didn't work, that we needed to know at that point. So the manpower, that it would take to do all that underwriting manually, you guys, I see a lot of this on my back end. There's so much to explain. There is no way. There's some processes or some ways to do that still, but it would require extensive amount of a team and work to go through a lot of that stuff. So making sure you have your credentials, to be able to supply that when you're linking, and making sure that's there. Same day instant approval for that. So it's going to just do a check to make sure the depositing, the revenue, everything is in there that needs to look like it needs to look to be qualified as a client. No if, and, or but about it. If you don't want that, then you don't want that. Okay. But that's the option, and it's very safe and secure. Here, let me make sure I didn't miss anything. I wrote down a few notes here on my paper just to make sure that I'm covering what I need to. Yeah, I said link your bank account, as I mentioned earlier. Now let me come back to this part. So some teams haven't, or some banks haven't linked up with Plaid, so that's why it wouldn't work. Qualifications, as I stated earlier, 3,000 plus in monthly revenue. That's the range we're looking to start with on your lowest month is what we would prefer. This provider can work with 3 to about 15,000 in monthly revenue. We ideally want them to go through 3 to 14,000. Once you get to the 15,000 plus on your lowest month in the last 90 days, typically we go to a different provider. We just want to work with the right ranges. We don't want to just commingle or mingle everything in one and have one big team viewing all of these files. It wasn't energy and time effective. The person knew not to apply, yet they applied. And I'm over here standing like, this person knew better, yet they still applied, wasting their energy and time, let alone ours. So make sure you value that. It's very important that you guys have that. Now here, 4+ months time in business is usually what we want when it comes to this. Sometimes you may see 3, but 4 months is reasonable because they're going to look the last 90 days usually. So 4+ months is best, especially if they're looking at the month-to-day revenue. Make sure the depositing is correct. You have enough of things into the account. Minimal NSFs, non-sufficient funds, negative days, no more than 5 NSFs, negative days in any of the last 3 months. This is what gets a lot of people right now in this market. So the biggest cause for concern, and I'm not going to get too deep into this, I see it all, guys. I really do. I'm not cocky. I'm confident, I'm certain I grew up with right morals, values, the beliefs I had, but I just had to reshift them over time, especially growing into business. The reason this market is so hard, there's so many implications and so many different varieties of factors. I don't want to start listing them all. Supply chain issues. There have been government mandates in the past. There's been a lot of disruption. There's been a lot of recovery periods. There's been a lot of distribution in terms of getting your leads, getting new clients, cost per leads, cost per acquisition costs low enough, retaining your current clients, focusing on them even more, bringing them back, ascending them higher, not having a structured LTV, lifetime value of a client or of a customer, so you can ascend them to higher. There's so many things. That's not just all of it, but you have to understand where a lot of this is coming from. And if you don't have what you need, it's going to make it difficult. And a lot of the times you eat up into your cash reserves. You can't liquidate enough of. You don't keep enough money in your account. More gets withdrawn than what you deposit on a day or every other day, end of the week. So you have to keep in mind where all of your money is moving, your expenses. You have too many in expenses. That's where the money's moving. That's leaving you with nothing, bounce checks, overdrafts. We don't want to see that. So no more than 5 NSFs, negative days, I should say, or negative days in any of the last 3 months. Excuse me. Current loan consideration. If you have a current capital advance, the amount you still owe will be taken into consideration and cause a reduction in your approval amounts. 4+ deposits is always best per month, but we are willing to see 3+ more or less if it makes sense. So even if they were under 3, like certain industries like construction do that a lot, even trucking right now, I see a lot of hard market for them. It's really difficult. And so even if that's the case, we're still willing to look through that. But a lot of these lenders, whether they're lower or higher revenue, a lot of the lower tier revenues lenders will want to also see like 4 to 5+ deposits, 3 to 5. Like with lines of credit, like 4 to 5+, 5+ deposits, and even more. So it just depends on the provider, and we can look at the circumstances of your details. So even with that said, more or less, that's kind of what we want. Even if under, we're still willing to look at this and it's still worth going through. Just understand the more deposits you can make within a month, the better off you will be. How it works, before I get into some of this, let me cover parts of the breakdown of this. So you're going to complete about 4 questions through our app sequence, and then you'll be able to go through that rest of the process. Soft approvals are here, and that's an offer provided based on your stated information. You'll link your bank account. As I said earlier, the credentials part, make sure you have that I can link with Plaid. You'll receive your funding offer after you link your banking information. Again, very safe and secure. Just think about it. What would those use of funds be for? It's more meaningful and impactful. It's not the whole process of linking. If you didn't get those funds, what dire needs, what dire situation would you then be in? Now you couldn't continue your operations. Now you have to go back and work your 9-to-5 job or find something else where you can do 2 to 3 things instead of 1 at a time and alleviate that stress. Feel free and go back to your family, feel more healthy and in better relationships and in better standing with them. Take some time off, feel better, not wasting energy and time, being more efficient as a person. It does a lot of good. And so here you'll sign the documents and final underwriting steps completed, including a live phone call sometimes. The funds then are sent to you and funded status would be then sent to you. Now, you can decide how to receive those funds with a debit card. It could be the business account or the account that you have that it could be sent to. So those are a few instances. And the thing is, just understand the banking hours. So if you were expecting it to get done, but it was closed, it just probably the next day. But if you want it instant, same day, then perhaps the debit card would be the way to go. If things change on that end, you would know about it from me as well. So that's a bit of that process. Let me continue from this part. And it can be done within an hour or more or less. And then sometimes usually within a business day, depending on what you're linking and if the money's coming in or if the money's coming into the account that way instead of the debit card, etc. That's how it would be proposed. So let me switch over here. Okay, I was already on that one. So you can get 25 to 75%, or if it's trucking, I've seen like 50 to 75%. But in this market with lower tier revenue like that, again, it would fall between like 40 to 50 or 40 to 60%, even less if you have like the basis of only 3,000. Like, how are we going to push it past 50% when you have barely the minimum? And maybe we're starting you off at 30, 25 to 30%. So if it's your first advance, usually it's 50 to 75% for trucking, but it could be less as well of your lowest monthly revenue in the last 3 months. And we also will take your average into consideration to try and get you more. For example, if your lowest month is 3,000 and you're averaging here, let me scoot this in. Sorry. Oh, sorry, I could zoom it in, but I'm going to leave it like that instead. So if your lowest month is $3,000 and you're averaging $1,000 with $20,000 in annual gross revenue, that number is readjusted sometimes. But $20,000 in annual gross revenue at an average daily bank balance of, let's just say here for $1,000, it's best to have above 1,000. If less, because of these lower revenue files, we could consider it. So even at a 500 and above, more or less, even less than that. But it's best to have the 1K range. That's what you want. A lot of these providers, not even on the lower revenue, but even on the 15K and above, 25, 30K, 50K plus, they want a minimum of 1,000. And some of those industries are going to want at least a 1,500 or 2,000, 2,500 plus. And they're basing that off of different subsets of those businesses. But we can still look at it if not, but maybe harder if your revenue is higher and you can't meet that 1K. Then you can get between $750 to $2,250 more or less to start, come back and get more right away if need be. It can be higher or lower depending on your business situation, as well as your depositing frequency, the type of deposits, and more like your industry, bank statements, other positions, if there are those. If you've had a past default and nobody's been accepting you, and this may or may not work, usually wouldn't with defaults. To start more on the lower end, if your projections are going down, like decreased revenue recently, projecting downwards in the last 3 months, as well as average monthly revenue. Decreasing revenue trends, especially for like banks. This is not a bank, but when they see that, they can cut as much as 50%, and when you can get approved for as much as 75% plus. And at that point, you may not even get any funds if the revenue has dropped tremendously, way over 50%, 75%. They're going to look at it and go, yeah, that's a declined file. And cash flow, we don't even have to do an analysis. Just based off a lot of that, we could tell that it is not sufficient enough. So start more on the lower end if your projection is going down, so forth. And if you have unstable cash flow, bank statement concerns, there's more of this that I haven't listed here that we do on our back end. But a lot of the stuff we're looking at numbers like average daily bank balance and average daily sales is continuously low. And when it's too low compared to your deposits and revenue, it just doesn't justify giving you more. And more goes out than you keep in. Those withdrawals hurt you more. You do it consistently, but you do too much in high amounts than what you deposit in any given day. Like you're withdrawing more, but you didn't deposit this day. You've withdrawn for the last 4 or 5 days up above $100,000. If you had that, or 100,000, and we know where that money is going and what you need to pay and who you need to pay. But then we see that you had no deposits in that time. You still have some money, but within the first 13, 15 days, we could project you're not going to have enough based upon this pattern. So we have to readjust. So there's a lot of things that we look at that you guys don't see. And when it's too low compared to your deposit and all that, and more goes in than what you can keep in, negative days, your credit, and more. But this one is less of a credit concern because of this lender. Note, if you do not get all the funding you want in one shot, don't worry. What I tell business owners to do is take what you can get, and when in about 45 to 65 days, and or when you paid at least 50% of it, it just depends on your term duration. There will be a different number there. Then we can look at refinancing in terms of getting you more funding and getting you approved for more funds. Then the second time around, we can even approve you for better terms, rates, and give you a higher amount, like even double the amount, more or less. This is what a lot of business owners, myself, have done. I haven't done it recently. I've done stuff like this in the past. I rely a lot on business credit, personal credit, have enough of it. When you start building your business credit profile, your personal credit profile, doesn't necessarily mean that's you're never going to look for additional funds to grow and scale and do a lot of this with other projects, investing into new opportunities. But you're going to get to a point where, I don't want to say you plateau, but you'll start to learn the industry better. And you're going to understand, man, you should have done this from the beginning. And your credit is everything, guys. Credit is king. So, okay, I was going to talk about what's better, credit or revenue, but that's not for this one. I might make a different one. But both can be equally hard sometimes to get approved for if you don't have what they're looking for. And it could be a little bit of a lot of things. So here we go. So your payback amount, it is between 1.29 to 1.69. As I said earlier, your advanced amount, for example, you get $1,500 with the $3,000 amount in revenue that you're generating. To start, come back and get more after pay off 50% of the balance, excuse me. Then we may be able to get even you double the next time around. Then your payback is between 1,935 to 2,535. I see many up to a 1.5 being accepted, a rate. So if that, then 2,250. And this is the case when you haven't been applying anywhere and everywhere. So if you've defaulted, you've applied anywhere and everywhere, you've been rejected. I'm like the 20th person you've come to. You've tried just too many times. You haven't waited another 30 days. And that's another thing. I made a video on this. I'll be releasing it soon. It's a long video because I streamed it live for some people. And so I answered questions there, but I talked about how much time should you wait in between reapplying. Normally, it depends on the service that I would answer that to, and I have said that in another video. But with a lot of these, you want to wait like 30 days. Now, if there's something where you use the wrong account to apply with or something like that, okay, that's a little bit more justified. But if you're just trying to reapply and you're trying to go that's the problem you guys do is, for one, I'm very loyal. Like, I'm the loyal person. Loyalty matters more than anything to me. It's the number one thing. Now, I don't want to say you are not, but there are a lot of people who are not. And then there are those who are. There are people who have come to me who said something and did another. They act the part, or you can kind of sense it, but you still have your guard up. It's hard for me to trust people when it also shows me time and time again that in this space, it's hard to trust others. Like for me, you don't have to, you don't have to worry about trusting me. That's what I meant to say. Sorry. Introvert words, long video. You don't have to worry about that with me. I'm usually asking that of you. I'm usually asking that of the other party. I'm over here doing the best. I'm doing a lot of work on my back end to make sure something gets done for you. I'm working with the lenders day in and day out, guys. I spent already 41 minutes in this where I know 30 minutes ago I needed to go speak to a lender about something and I needed to email them on that and collect a few bits of documentation from a certain client. But I want to be here to give you the value so you understand this. And loyalty means everything to me. The number, logically, does the offer make sense? That's one part. I get that. But you cannot forget about the person. Some of you guys look at just the numbers and go, okay, squirrel, thank you for helping me. We might do business later. But there's this huge gap where it's so incompetent. It's so naive of, hey, well, I have something here. I may be able to help present it to you this way. And it's only going to be in your best interest to do that. And sometimes it's just an adjustment. And sometimes we don't see it. We know we're that person, but we just miss it. So I'm not here to bash anybody, but be more cognizant, be more mindful of things like that. And know that I'm not here to pressure you. And a lot of you know my story. I spoke a little bit about that in the beginning. There's more details. But hopefully that sits with you and you understand that if you want the very best out there and you want it from somebody who's going to show you information you can't publicly even see and know what's best without just applying anywhere and everywhere, spray and pray, and then you find out you have too many inquiries, even if they're soft pulls, too much recent activity. If it's a hard pull, then boom, even worse. So be very cautious and mindful of a lot of this stuff. I put myself in your guys' shoes all the time. Hopefully you guys can respect me when it comes to a lot of this stuff. I feel like I'm a very respectful person, very easy to get along with. So you shouldn't have any problems with me. I'm very honest with you guys. Like I said, I'm normally not the, I didn't say this, but I'm normally not the problem. And I don't say this because I'm sounding cocky or nothing. I've put those crinkles out. And I know at this point in my career, I know it's not me who's the problem. It's usually the other person's beliefs, usually their character. The character is number one. The character, the attitude, the effort. Are they cocky, stubborn, ignorant, egotistical? Are they driven that way? Are they just hard-headed? All this other stuff. And if you are, we can work with things, but just leave that out the door. We don't have to create this friction and resistance. I never butt heads with people, but we can eliminate that or completely lower it to the bottom. And I'm willing to work with you, but we become too much of a problem. It's like a liability now. You've never been an asset, or you're an asset that turned into a liability. It's like you're going to hurt us. You're going to hurt myself. You're going to hurt my reputation. You're going to hurt my team. And just be considerate of that. I'm not trying to sound aggressive or negative about it, guys. That's not. I don't want to be that person telling you. I don't want to be, literally, I'm not like that. I want to be that person telling you this stuff. But it's better that you hear it. So here, that's the amount. So when it goes past 1.5, as I said, your revenue could be too low. It's too much in fluctuation. Low balances, negative days are accumulating. You've been declined everywhere, and more can contribute into a lot of this. Use this money to grow and increase your revenue. and your benefit exceeds your repayment, that's how you should look at it. Can you double, triple, quadruple your revenue with this? You take, let's say, 1,500, and you're going to buy 4 tires with it. You really got the Fred Flintstone's vehicle right now. It's running on rocks. And so you got to get 4 tires. You're going to replace it. It's a new vehicle that you just got. You're probably an Uber driver, or you got a new piece of equipment, new tools and supplies, new cleaning equipment, just a little bit of it. You need to restock, you need new napkins, or you need new stuff for the bathroom, whatever it is. That's going to help you go from $1,500 to about making $3,000. So you're above the $2,535 risk. Or even if it was less than that and you got approved for a lower rate, that's the thing. Don't expect these lower rates when you're a higher risk profile, especially if you do have a little bit more higher revenue, but your credit, your time in business, your industry, the economy, all of these complications, you don't have the underwriting. So you start with less if you need to and evolve into getting more. And understand how much you need to use this to pay off expenses. You need all these other things. You got vendors and suppliers that you got to pay. God, you're like, oh my, already 50% of my funds. Now I have another 50% where I can only get 2 tires, or I can only get 2 pieces of equipment. And so you may have to restructure things if you've had enough of an established relationship. If not, you got to work with what you have and then renegotiate down the road. So think about these things, or better source those and better find out those distributors and a lot more information. Purchase in bulk and wholesale. Understand your market, understand your product market fit, understand all of this stuff, and don't be over leveraging yourself. Given the funding details, you, as in a hypothetical situation, submitted to me, you have what we call C to D paper. And that just means here you're going to get terms between 3 to 6 months and rates between 1.29 to 1.69. To get a higher, like 4 to 6 month time frame, or closer to 6 months in a term, it's best to have 5K plus, like 3 to 6 months here, but don't just do the minimum. Get closer to 5, get closer to 10,000 plus, so we can try to push past 3-4 months if possible. And if you're just a rookie and you're new to this, then we normally will want to start off with less, unless the revenue is there, or if it's enough and it's consistent and it's in the right industry. Like, we're willing to work through things to make sure you get what you can get. So to get a higher amount, just try to have more revenue, get into that 15,000 as well range, so you can fall between like 4 to 6 months. Even at a 15,000 in minimum revenue, those usually go between 4 to 6 month terms. So just keep that in mind. To get 7 to 11 months, normally most lenders, and it's usually at this amount, this is like the standard for a lot of these lenders and providers out there, even with A, B, C, D tier type of clients, you need 25,000 plus in monthly revenue for a lot. Sometimes it was 20. A lot of them want 25. It can be readjusted with certain lenders, but this is the case. This is just the standard of what you're going to see across the board. To get 12 to 24 months, you need to be doing 50,000 plus per month in revenue. And that's a readjustment. With those higher tier lenders, they're going to want you to do 75, 100,000 plus. Construction businesses, trucking businesses, like at 50,000 at a trucking business, you're not considered A tier. In this market, in a past market, you might still be blended with an A to B tier lender, but you think you're true A paper, like best rates, best terms, andale, you got everything. And so instead, you're a B paper. So I have to take you to a B tier lender based upon everything, based upon not only the fundability details that you bring to the table, time and business credit, all this stuff, but everything in the bank statements, everything that you need to supply, I look at. Is there enough of a demand in this market? Because lenders have been moving. And keep in mind, guys, I've said this before, but I have the best lenders, direct lenders, indirect lenders. And in a lot of this market, you want to do it where you go through an in-house brokerage where it's quote unquote indirect, but I already have those direct lenders housed here. It's just best to do this for flexibility, better max funding amounts, terms, rates, and everything else included. And there's a lot of scrupulous lenders out there who do a lot of backdooring, who it's not always set in stone, because if you submit something, and I have the best lenders who you normally or usually at all wouldn't do anything bad, but you never know. So it's sometimes best to avoid that and best to go in this direction. And they changed their guidelines. They don't want to accept people this way. Send them over here. They tell you, Michael, we already have that relationship. Send them where you keep sending them over here, and we'll look at the file that way. It is best to do that. So 50,000 plus a monthly revenue in your lowest month with 1+ year time in business and 675 plus FICO to get rates between 1.19 to 1.3, 1.29. If that, you need a 700 plus credit score. with 50K plus in revenue in 2+ years time. The 700 plus, the 50K plus, even the 2 years time is adjusted with this market even being higher. So a lot of them want 725. They even want 75 plus. They want 2+ years. Certain industries, 100,000. Certain other ones are good at 50K plus. We meet that. And it just depends on what I get. So whatever you guys submit, I'll know by looking at a lot of this, like, yeah, that's the lender. There's these 2-3 lenders in that construction space. I know I got to go to them. I'm going to entice 2, but I really wanted the third one, or I'm just going to go to this one because I know from experience, this is actually the best solution for them. So rest assured, guys, I'm doing all the hard work on my back end. I'll keep you up to date. You don't have to worry about that. Again, I don't talk much. I get it done. And so you'll know the exact terms and all you're getting after we've been able to review your application and documents. In this case, it's bank linking, so it's a little bit different. So I can't say exactly, this is not again set in stone, what you'll get, but we'll be able to do a soft pull. And through experience, more or less, I can understand the range you'll get into because I've seen a lot of this go through and what hasn't gone through. So a soft pull, let me go ahead and put this in 15-point font from a 13.5 font. Ooh, you went big on that one. No. To submit your application so it won't affect your credit score, and in this regards without credit score requirements usually. Plus, you have to start somewhere. And I'm going to actually raise the font on this from a 12 to a 15. Oh, bigger in there. Plus, you have to start somewhere and move up so we can increase your terms, decrease your rates, and get you more funding. And remember, with me, you're working with the best lenders, the network, my team in this space. I know a lot of people would say that, but in fact, I've been doing this for quite a while, and I know that there are these bad lenders and providers. There are these bad people out there. You shouldn't have gone there. Maybe they got you something, but I wouldn't have gone there. I wouldn't have taken you there. I know why I wouldn't have taken you there, while somebody else did and recommended you. My friend said this, though. No, but your friend, they mean good, but that's not a valid answer, or it's not very valid with me. It's like, okay, great, but you still won't work. It still won't work, or this is not what's best. So don't do that. And here's why. I'll give you that. So you'll know that. And what makes most sense, if your benefit exceeds your repayment, then it makes sense. Sorry about that. In most cases. So understand in the majority, I should say. But just understand, if you got to go backwards a little bit with cash flow, well, what do you need to do? Well, you got to pay off some expenses. I got repairs. Okay. Pay it off as fast as you can. If you have enough money in the account to pay that. If not, okay, throughout the duration, come back and get more. You paid off enough of the funds or completely paid it off. What do we do then? We get you again more underneath the same provider. If not, you have more revenue at that point. Okay, now we got to go to a different provider. Boom, boom, like that. But for example, not set in stone, let's say you get 1,500 at a total payback of 1.45 rate, because the standard for that tier 1.29 to 1.69, but a lot of these files I see going from a 1.4 to 1.5 or 1.69 and 1.36, 1.3. You get low enough with higher revenue and a few other things, but it's just going to be that hard. And so with lower revenue across all boards, usually you see higher, especially if you have bad credit, you can expect to get like a 1.47, 1.49 plus 1.55 and really bad credit. And so to get that 1.38, 1.37 average, like, you got to have better details to be able to justify. And if another tier of lender, we look at credit and you don't have 700 plus, 750 plus, 725, 750 plus, with everything else looking good, that factors into getting you a better rate. Like, you cannot always expect the lowest. So you got to have the details. And it's not about the rates, guys. Stop making it about, well, my interest rate is too high. No, it's not about the rate. It's because you don't have an expected or a high enough margin, and you don't have the current margins to make up for the ones you will make. So it's not valid there, and there's not enough of a return on investment. Your ROI, what's your operating cash flow like now? What would it then look like? Or how much free cash flow would you see? You're not making sense of it because of that. And you're just trying to make up a lot of things. And there's more that I would ask why that wouldn't make sense. So rest assured, guys, I'm taking care of you. I ask the right questions as an entrepreneur should. I get to the major problems. I don't just look at the minor, like top level. And you sometimes don't even know that was a major problem. I've had people that I've helped out and they go, oh, dang, I didn't even know that was the issue. And I go, yeah, it's based on your actual profits here on this side. Dang, I didn't even pay close attention. Yeah. So what I would do is look at downsizing that, get a higher tier of an employee with the right skill set. You can train them to learn that skill set that will then help you generate more revenue. bring them into the right culture, but do they also have the right experience? That's the common denominator. And there's other things we can look at. So your industry credit revenue, credit in this case could be a little bit different because of the no credit requirements usually for this. Revenue and DTI, in some cases there, can factor in with 3 months, 60 payments or so. Then your payments will look like something like this. $36 daily, weekly at $180, Mondays through Fridays usually. Bi-weekly, $260, monthly at a $720 amount. Overall total cost of financing by 3 months, about $2,160 or exact, depending on a few other things. Cost of funds at $660, more or less, depending on the overall amount that you're getting. Paid off earlier if you can, no prepayment penalties usually here. And we usually have the best early payment discounts. Again, this is a little bit different with lower tier revenue, so it's not going to be, I guess, so much of a significant difference. But make sure your benefit of using the funds exceeds your repayment. Otherwise, you will never justify doing this. If you're doubling, tripling, quadrupling your revenue and exceeding the repayment, then it makes more sense. And even if you're not, but need to fix things or get back on track, then you can do this and it makes sense. I've done this a lot. In this market, I do that more than any other market. It's the economy. It's such a bad place. Product cost, markup cost, God, it's pretty bad all across the board. If let's say you were to get 1,000, and or if you had negotiation power to get less, even to lower your repayments, if possible, then that's a daily of $24. So from here, where you're getting $1,500, a $500 difference, you drop from a daily of $36 to $24. That's a big amount. $12, I mean, to some people is not a lot, but when you have lower revenue, you're just trying to stay up afloat like the Titanic. You're not trying to sink. You're probably at the end of the top before the bottom comes down. You're like just trying to jump off at the last second or whatever it is. It's like, oh, that would be a lot. That would be meaningful. That's an extra $12 that I can use this way. I can have a better average daily bank balance. I can reinvest it in a little bit of equipment. It could be a lot of things. So that's what it is there. And weekly at 120, now you drop down $60 from that. And you're doing here a weekly repayment. So 120 to 180 is big for lower revenue. And that's not a lot. Like when you look at a lot of higher tier files, you're normally not going to get 100. You're going to get like 200 plus, 220, 250, 370 with higher revenue, and you're taking a higher amount. And so when you get to those higher levels at a 350 or so, and you're taking, I don't know, 50,000, 60,000, then you got to look at your term. You got to look at the repayment, but you got to understand, if I can start with less, maybe I cut that in half. And let me start off with 25,000, so that $350 or so payment comes down to 250, 225, more or less. Okay, that's more reasonable for me. I need to relocate this money into something else first. This may not be your first priority. You still have other things, other contracts you need to fulfill. You need to have enough money for payroll. You need to have enough money to do these contracts and see them through. And they want to have you have more money in your account. So the difference of $100 for a lot of these business owners is a significant difference, and it's a huge jump. Or if $1,500 at 4 months, let's say now we dropped it. So the daily there is $27 as opposed to it being $36. Weekly at $135, bi-weekly $270, monthly that's at $540. So let me do some quick math here that we do on our end. This is a little bit different. And let me move this up here. I need to factor this in. Okay. Okay. So I was just doing a little bit of extra addition by subtraction on my side for nothing like that, nothing related to this, a little bit different. So daily $27, weekly $135, bi-weekly $270, and then monthly $540, or $1,500 at 5 months. But it'll be harder at your revenue and to do more to do. So don't just expect this to happen, especially with lower revenue and it's your first time and you're up and down with revenue and stuff like that, deposits. So daily 22, weekly 110, 440. That's like for a lot of business owners at a lower revenue, it could be a lot though. If $1,500 at 6 months, $90. See how it dropped significantly from 90 there to 180, a $90 difference. But a night and day for a lot of these business owners and yourself could be a major difference. So here, when revenue increases to, let's say, like 10,000, for example, and you get like 7,500 based off the 75%, and your revenue looks good, it looks clean. Perhaps you've taken funding in the past. you're credible. At the highest, 75%, then at a 1.39 rate, again, that's there more or less, then that's $10,425 of a payback. And if like 6 months, if possible, then that's about a $435 weekly repayment. Or if, let's say, 5K in monthly revenue at $3,250 of an approval with a slightly higher rate of 1.45 at 5.5 months, that's $4,713 on that $3,250, excuse me, of a payback. And if like 5.5 months at this, as I said, with the terms, then that's at $215 per week in repayment. So it's adjustable, and it depends on what you get. Sometimes you might not get to say, hey, can I take less? In a lot of these, what you're given is what you're given, and just understand and be calculated. Calculated. In this market, you got to be the most calculated person. And that's why brushing up on your finances in this market, if you're not doing that, you're losing like big time. You're losing a lot. You're losing into your profits. You're doing a lot into your margins. And you might have somebody who does this. Are they good at it? Do they really understand it? You got to know those things. So these are just examples. They are not set in stone. And the only way to know what you'll actually get is to submit the application. It's just a soft pull, so it doesn't hurt your credit. And it doesn't hurt to at least submit an application. Also, it's not about the rates, rather the total payback. And if you can get a longer term, the better. Plus, you have to start somewhere, build the relationship up, and then get access to better terms, rates, amount of funding. If you don't start with a higher amount at the time that you do this, it's not and shouldn't be based on just rates alone or at all. There's more to this, like your benefit of taking the funds, exceeding your repayment, and doubling, tripling, quadrupling your ROI monthly. So it helps for how long will that work, and a lot of other things that we can calculate. Application, there it is to begin with. Okay, so that should round up everything in this video. I can go to the comments here in a second, but I have another document here. This is kind of sensitive, so you guys can't see this stuff. This is for a client I was doing earlier. But there's another service, and I'm not going to go through the details with this one. I can show you this. That's why it's in your best benefit to fill out the questionnaire, and I'll tell you to skip it. I'll say, hey, this won't be best right now, but this is what it could look like. I'll show you all the details. Like, oh, that's why. Now I understand. That would actually be the best solution, because once I have that revenue, then I can jump to this. Here's the qualifications for that. And then down here, and I have a conclusion for it, I could then show you what it would take, like your roadmap. What can we do? What can we do now based upon how you use your funds, how you need to do this? There will be a conclusion separate for each person. But let me see if there's anything in the comments. You are welcome, Rick. Thank you too. Appreciate you guys. Thank you for tuning in. Let me give you guys a quick recap and some closing thoughts. So we just went over this up to 10K, same day, instant approval. I want to make sure that I don't miss anything. So I'll flip back to my side document here that I have. But we went over how much it could be up to, the approval percentages, depending on the situation, more or less, the estimated amount. Based on that, when we looked at that account, do online banking, do with an online plaid linking. So having your credentials is most important with these revenue, with these lower revenue. You have to do that a lot of the times. It's like too much to manually underwrite. And a lot of these don't like go through, or they just default. Like all that energy and money, time and money spent for those people to fulfill on that, not even I would want to do that, to be honest with you. Per case basis, certain providers would then have to look at it. If you're not in California, in New York, that's good. If you are, then it normally wouldn't work, and we'll go through another process to evaluate that. The non-sufficient funds or negative days, we spoke about the process of how to get through a lot of this. We've covered. If there's anything you have problems with, you can reach out to me and I'll be able to help you with that. There are, of course, higher tier revenue sources that we can go through. I do a lot of that every single day. The 3 ways to get funding: credit, cash flow, collateral, although I didn't get into all of them exactly. We spoke one today with cash flow, revenue backed, income backed funding on your business. And so just have that in mind. There are other solutions out there for higher revenue, of course, for credit. If you have collateral, excuse me, my knee was itching. Not sure why, but it happens. But there are a lot of solutions out there, and they are out there, but you have to know where to go. Don't be that person. I don't want to say a name out there, but don't be that person who does that, because I know that does more harm than actual good. I'm not trying to say, hey, come to me only. No, But a lot of people, they do turn to me because of the full transparency. They don't get this information everywhere. They just get other YouTube videos that go, here's how to improve your business credit. And that's good. Like there's content on that. And I have a lot of that material up. I know what to do with business credit well, and there's a lot of things that change. Nothing to take away from, but a lot of these revenue-based, even collateral-backed videos, and I go, just because they have a huge following doesn't mean that they are the right person to turn to. You maybe have a friendship and a relationship there. That makes sense. Okay. But how well do they know their stuff? Are you turning to somebody who's experienced enough? If they're not, you're just trying to help them out. I get that. I was once there, and in certain parts that are still are evolving, I'm still learning parts of those because they're evolving now. And I'm so grateful and thankful that a lot of you have stuck with me. And sometimes you might not get what you want, but I'm not going to be that. I don't want to be that person to tell you like, like I've told people, I don't want to be that person to tell you. I'm not sensitive. I'm thick skinned, but it's like, I don't want to be that person to tell you that. And you know my personality, and I'm not that person to want to do that, let alone be on a call. Like I could do well over calls. If it makes sense to do it, I have to be very calculated in doing that with my energy and time. Emotionally, I love it. Logically, is it there? Is it not? It is. Okay, still great. But it's not just based off that. I really do care. It just has to make sense for me to do that. So that is all explained. Let me see if I have a few tabs open that we can go through very quickly. I know we've gone way over time. Let me move this document over to show you this. This is the questionnaire. I don't want to go through it all, but here, let me just skim through it. It'll look like that more or less. Some of the results that I've generated, there are plenty more, but I just put a handful of them. A little bit more about myself. There's more of my story too. I've made other content on that. And that's just an exit pop-up in case you wanted more information or not. It's just standard. And then non-startup or startup, you can select from one of the two. This may look different in time, but here you can select from there. It'll ask you simple questions, or you can fill out these fields. It's very comprehensive, and it's good because it's also going to help me pre-screen. And it's in your best interest to do this. So it could take you literally less than a minute. You might see quite a bit there, but literally it can take you less than a minute if you have what you need. You don't have to have the exact numbers, but give me close enough. Give me, okay, I think it's this, and I know it's close enough to this. It gets submitted. I'll analyze, I'll evaluate, and do it how I need to do it. Here's how it works. It'll show you. There could be a video still there, more or less. I got to change that to 2023, more or less. But it's all there. Complete the questionnaire form below to get a personalized and customized, a highly one, by the way, email response for your best funding option and options from a real business loan broker expert. I should say pre-underwriter / underwriter on that point, based upon how I look at a lot of these files. And I know that's like where I like to do a lot of the work. Please be serious and responsive. Please do not be that person wasting my energy and time as well as my team, but in this part of the process, myself. And being hard to get a response / feedback from. I spend a good amount of, and I got to put the U there, I just caught that, of my energy and time on this. Plus, get a free 6-step pre-approval lending checklist to get you approved for funding faster, much faster, without making mistakes. So I'll show you what you need to get approved for and what it takes to get approved for. I do a lot of real estate investing side of things as well, doing quite a bit of that. Fix and flips, multifamily, commercial properties, foreign nationals, duplexes, triplexes, quite a bit. I just listed a few of them. A lot of rental properties. I understand that world very well too. And I just evolved over time. And so that's everything. We went way over time, but hopefully this was of great value. And you understand that, hey, maybe I could have summed this up in less than 10 minutes, but I really wanted you guys to get the understanding of it. Do you really get it? And there's also little supplements of tips that I threw along the way and what we look for and what we're trying to do. So that's worth a lot. And a lot of that stuff you wouldn't be able to hear. Others would charge you for it. Let's get on a call, and so I'll charge you $30 to $50. And so I'm not doing that. I could, and I probably should, and charge a lot more because I do higher level calls. It's not always like I'm going to do a call though with somebody. You have to use my energy and time effectively. And I know how to build it out where more would be going in. But keep in mind that I'm earning only when you get your funding, with you getting the funds. So I don't eat until you do. I don't feed my family sitting at a table happily, whether I earned it or not, still happily, but I don't get to go into that fulfillment. I don't get to say, hey, let's take an extra day or two and I can take the kids, or I can take my niece and nephew, let's say, for that example there. hey, we can take them over here and do this a little bit more, alleviate stress, and be able to give back to the community. I do plenty of that. And so for a lot of this stuff, just keep that in mind, who you're working with. And I don't want to say who you're taking away from to be able to give back and reinvest and then be able to help out more. But that's what you guys need to have more of up here instead of this the whole, well, I run a business and I do. Yeah, great. You run a business, but you just have a terrible character. You have a terrible way of, I don't want to, because I'm not the best communicator either, but you just have a bad way of cognizantly thinking of it. And so it's okay, but if you're just so on that and you don't want to change that, that's a whole different thing. You can't change people always. You can't change them. But my driving factor in a lot of this and why I do what I do is because I care about the person. I care about their health. I care about the relationships. I care about how we can help improve that if need be there, because I've gone through a lot of personal development. And not that I'm going to layer it thick on you, but when it makes sense to, hey, I won't be that person, but look, this is my story and this is what I saw. And a lot of people, they come up and go, I know I need to improve this and I need to get my health better. And I know that's affecting me when it comes to my business and I'm operating it. It doesn't feel good. I have to leave. I have to take a break. Like all of these little things. And it amounts to all the stuff on our personal life that we just have a lot of junk in. We're hoarding and we need to change that. How do we go about it? There's different ways of restructuring this. And when people ask me, like, what separated me, and this is where I'm going to end it, what separated me, aside from what I said earlier, the loyalty and a lot of that, is because I've always had the heart has always been there. Like, I've always had this to lead in with when I didn't have this. See, when the genetics weren't there, when I didn't have all of this, I still had this over here. Even though I played sports and I did a lot of that genetically, this isn't there. But guess what I had to also build more on? This up here. I wasn't the quickest. I wasn't the fastest out of the gates. But I sure was very good cerebrally thinking of things. So I was always 1+ steps ahead of the other person on the field or off the field. And so thinking those things through and making sure that this and this, and I only strengthen them in this, especially over time. And so casting out a lot of the doubters, casting out a lot of the people saying, well, I wouldn't be able to play the sport here and then do that and then grow up to that amount and then schooling, and then I got better and way better at it over time as things happened. Then you got to see that more often. And so I look at a lot of what's happened back then as my why to keep fueling me, like a lot of these other entrepreneurs or business owners are doing. And they use that, like, you doubted me, you left me. No, it's not necessarily coming from a neglect standpoint, but it's coming from a whole like, hey, you didn't believe in me in this, or there's a person here that fueled me. And hey, over time, this grew into my why. And then this why grew into that. Losing things then grew into more. And then that's pushed me even further. All right. So that'll cover everything in this video. I'm very grateful, thankful for you guys who tuned in today to watch this same day instant approval up to 10K. There are other services out there as well. I do all of it. And I would think I do it exceptionally well with patience, feedback, and being open-minded. And that's what I ask from a lot of you. So if you haven't subscribed, please go ahead and do so. Click that bell notification icon so you do not miss any future content I'll be coming out with. And if you did like this video, please give it a thumbs up. Share it with others who you feel will find value from this. Whether they can or can't get approved yet, I'll help them. Like, I'll understand what they need to do, whether they liked it or not. Do they need to use a credit partner? Do they need to go into the 401k IRA? Do they need to use their savings this way? Do they need to liquidate this, have this cash on hand in the banks? Boom, boom, boom. Secured cards. It's not best to do secured cards, charge cards. Can they get these cards, open up new limit accounts? Boom, boom, boom. The list goes on. So that's all from me today. Appreciate you all for tuning in. In the description is all the information, and I will talk to you on the next one. Take care. Bye.